Hey guys, how's it going? Steve, Scott?
Good.
Hey, good for Monday. Coming off
It
a
is a
nice
Monday, and I
restful
think the
weekend.
market pretty much is validating the
The
fact that
Monday
it is
hangover.
Monday. Uh-huh. Of course, we'll get into that here in a little bit. I just want to thank everybody for attending. We know you guys have busy days, and we appreciate you taking time out of those days to come and hear what we have to say, not only on Monday, but during the rest of the week with all of the other webinars that we have as well. So before we get cranking here, I just want to take care of the legalese and make sure the lawyers are happy, and just want to make sure that everybody is aware that we're a publisher of information here at Trade Ideas. Um, so please do not take what we share with you here today as a solicitation to buy or sell anything. It's strictly for educational purposes. Now, if you do need a registered investment advisor or a Series 7 broker or anything from that arena, plenty of places online to go and find those professional services if you need them. So once again, we are purveyors of information, no solicitation to buy or sell anything. All right, I think you'll be happy with that. And before we get into the agenda today, for those of you who might be attending a webinar for the first time, we want to make sure you are aware of our webinar schedule. Of course, today is Monday. It's myself and Steve Gomez with Office Hours. Tomorrow on Tuesday, it's going to be Steve doing the Trade of the Week webinar with Andy Linloff riding shotgun. Change it up a little bit on Wednesday. You get Dan and Brad, which is always entertaining, with the Q&A demo. Then we round the week out with Andy's trading studio, and I ride shotgun with him. So, of course, we give you Fridays off to enjoy your Friday, but Monday through Thursday.
Did you see what we did there? We, we mixed it up with like no duplicates. Monday is myself and Jamie, then myself and Andy on Tuesday, then you got Brad and Dan on Wednesday, then you got Jamie and Andy on Thursday. So there's really no duplication of two-man booth working, and we try and keep the content fresh. And so if you didn't realize that, that's all about design. And then, of course, now the new easy-to-remember webinar schedule is basically Monday, Tuesday, Wednesday, Thursday at 5 p.m., which I think was a great move for a lot of people to be able to make their day end off with coming in here to our webinar rather than coming back later at night for some of the later ones. But, yeah, we tried to really mix it up for you guys there.
Right, and not to leave off the person at the top of the list there, but if you haven't been doing so, you might want to check out the live trading room hosted by Barry Anderson. Usually having somewhere in the neighborhood of 500-600 people in that room and climbing. Barry does a really great job at moderating the room, so if you haven't taken the time to kind of go explore it, you might want to do so. All right, so once again, the agenda pretty straightforward. Everything changes a little bit. So Steve, if you're ready, I will pass the baton to you. We can talk about what's been going on. And
let's look at some daily charts here in the major indexes and indices and see what's going on. We'll start with the SPY, like we always do, which is our ETF for the S&P 500. If I zoom out a little bit more here, just to remind people, these lines have significance. That line right there was, an all-time high going way back. This was our all-time high going back, but this was a new high right here in the SPY. The sermon that we talked about last week really bears repeating again. Prior resistance levels can become prior support levels. And right now, really the range we're going to stick with in the SPY is to continue to keep this line here just to remind us of the major pivot point down here at these levels, these price levels. But with this next snapping rally, when the market thought we had one decision, but the elections really just threw a counterbalance in the opposite direction, and we had pens and paper, rejiggering and reallocating and money managers putting stuff to work. It's the reason we got this, because of the real unexpected change in the bigger picture from our election. But still, there's always things to be garnered in terms of technology. These are footprints in the sand, and they happen to have some patterns to them. So the prior breakout with these two little double horns here were basically holding us back for a long while before the election. But those two little double horns were taken out into an all-time high. And of course, the all-time high lasted a few days. And where did it pull back to? Textbook, pulling back to prior resistance becomes current support. And then a nice gap off of that level and back, see ya. Trains left the station again. I don't see one candle here that took out the prior candle's low. That is a market that is not letting longs in and may have more to go. But things can't go in one direction forever. We got to have some breathers. That's going to be a little bit of our topic today, is that we think the market might be ready for just a little bit of a breather here. Am I thinking that SPY could pull all the way back to this orange? No, I don't think that at all. But what could possibly happen is you start to look left again and start to think of levels of possible pullbacks. That's a reasonable level for the SPYs to pull back to over the course of a couple days. But other than that, we really don't have much, to go by, unless we were to go into the midday 15-minute SPYs and see if there was any hitches or signals in there that might give us some order. There could be, possible markup right there, which should ideally show up on this one as well. Did it? No. Hang on a second. Yeah, there it did. So when you're looking at a daily chart, yeah, I'm not seeing much here in this big green stick, but, if you want to come in and zoom in a little bit using 15-minute, yeah, we can see where there was a little bit of a hitch there. That level held, so it might not be out of the realm of ordinary to pull back to this, what do we want to call it, 2375 level, what it looks like on a 15-minute and what it could look like on a daily. So I'm going to leave these two lines in just for next week to kind of see what happens, two possible levels of pullback. Speaking of pullback, the IWM, which was one of our great leaders, the Russell 2000, the small caps, put in 4 or 5 days of nice breather right here, and then built a new base camp and moved higher. Friday put in kind of a narrow spinning top doji, which many times I'll tell you what, guys, some people put more credibility into pattern recognition than I, or they might not, but I do put a lot of weight into some pattern recognition. When I see 1, 2, 3, 4 nice green candles, followed by a very slight spinning top, narrow range doji day, well, let's forget this red candles there, because usually this kind of signifies this, what happened today. And let's flip it upside down. Boom, boom, boom. 4 days of nastiness. Finished off with what? Little baby doji right there. Sometimes these dojis can be the marker of the change in direction. So it worked here, and as far as today goes, it worked here. Well, let's look at this. I think this could be a very obvious markup for a possible pullback in the IWM. So we'll keep an eye on that level. Prior high could become current support. The Qs are still just an absolute mess, but they're getting less messy. We've kept our old lines in here, and they basically need to break above this 119.70 level, and they're still not quite there. They got close on Friday, put in a little doji like many of our indices did today, again, but this one is not as significant because it's just right smack in the middle of this range. And then lastly, what have we not looked at? We haven't looked at the Dow, and the Dow has been the strongest of all, followed by the IWM, and it even gave us a little bit of a bodied wick here today, but still 1, 2, 3 big days, followed by a narrow range kind of a doji. Surprised it didn't have more of a doji. It's got a nice, pretty good green body in there, but still, that's very bullish for the most part. So, where could the Dow possibly pull back? Let's look at the Dow 15 minutes. Here's what I see. I see some resistance that became support. This could be an interesting level. So we'll go ahead and pop that in there on a 15-minute level, and that should translate to, how do I get there? It is. So this could be a level to watch here in the diamonds, 195.48. But again, nothing's really changed. The diamonds, the Dow, are leading the way, followed by the Russell 2000, the IWM, followed by the S&P, and then bringing up the rear is still trying to break out and have happy new high hats. Is the QQQ, if I could type it correctly, is just not quite there. So this one's still in the back burner for a little while, but I thought it was interesting to note that there's our little spinning top doji after a nice 1, 2, 3, 4, 5, 6 day, 1, 2, 3, 4, 5 day move on the top and the bottom. The IWM, same thing. There's our little doji signaling the reverse gap up. Here's our little spinning top doji signaling the run is probably over and ready for a day or two of breathing. So when Jamie and I talked to you today about how we feel the market is ready for a little bit of a breather, this is kind of the stuff I'm hanging my hat on. It's the kind of stuff that we see over and over. Markets will go, they will trend, but they will have to also pull back and take a breath. And that's one of the hardest things for newer traders to do, especially a swing trader, even if this was a 15-minute chart, is to buy and have confidence, go, oh my God, I'm on a great one here, and all of a sudden I was up X amount, and oh shit, now my P&L is cut in half, what do I do? And this is where we fear that we're going to lose a winning trade rather than fear we're going to miss out on the way it should be. So then we bang out of our trade right here, right when we're not supposed to, just to keep the little pittance that we thought we had set up for ourselves earlier. So this first pullback is the hardest pullback to ride, whether it's a 15-minute chart and this is an hour's worth of candles, or whether it's 5 or 6 days. But once you get that basing and you start to feel the basing coming back in, and then you start to move higher, you're kind of breaking into a whole new realm of trading that is difficult for many people to take to the next step psychologically, because again, we all fear that these profits that we once had are now going to be disappearing, and then we cut ourselves short and leave ourselves short, not sticking around. Somebody asked me on Twitter the other day randomly, hey Steve, what's your favorite strategy? And I thought about it for a couple hours because I wanted it to be a good answer, but I just wrote back, patience, because that's really what it does require, and it's not easy. But patience will allow you to sit through these types of moves and then move higher, which of course works well in situations like, pot trades of the week, which worked really well the first day, but then, hey, we had to give some back a little bit. But look, we got some nice basing type of candles, narrow range, holding support level, and then boom, now we're higher. Now we feel better. Now we feel better that the patience that was so hard to sit through actually paid off. And so at some point, you guys will start to feel, whether it's intraday or daily, the ability to have patience and sit through what was once a nice winner, and knowing all the well in your mind you're focused on the bigger picture. So stocks have to breathe. Andy loves this story, but our friend Craig back in the day used to get really upset when stocks would pull back, and I'd say, Craig, stocks breathe, and he'd punch himself in the leg. Well, this one's taking a pretty big damn pullback. And it's easier for others to be patient for the bigger picture than it is, but I just kind of wanted to highlight that out to you. And I was in mid-sentence about talking again, these little dojis that signal possible trend reversals. The Dow barely gave us one, but still gave us a narrow range day. And then the SPY gave us a pretty decent doji here. I wouldn't be surprised to see just a couple days of relief, a couple days of give back. And that's what I'm just going to end on right there as the market synopsis. All right, Jamie, anything else you want to add?
Man, that's great stuff. And, patience with proper technical analysis, yes, definitely the way to go.
The bigger picture. Versus
just simply hoping, right?
Yeah.
So, realistic expectations and patience, of course. That's one of the.
And then this line was easy to draw for a possible pullback in the SPY, but hey, this market's so damn strong, it might not even think about getting close to that. So looking at this bigger daily candle wick, guys, just to remember, this is where we can go into our 15-minute, try and find some pivot levels. Support. There's probably a decent pivot level right there. So that's how you can also, make a case for this too. I'll go ahead and throw that in there as well. That would be a very shallow pullback, but nonetheless, that pullback could be your three scenarios: a shallow, a mid, and a very deep type of pullback. But it's kind of what I'm expecting. Yeah,
and for since we don't know what's going to happen, Steve, we could be establishing a range inside of the previous day. We could have flatlined for a while. We just don't know yet. But the bottom line is, having some realistic expectations of where we might pull back to is crucial when you're trying to navigate.
I've got a guy who sends me and probably 300 other Twitter accounts something once a week, and it's just the complete bearish guy. You can see him working. He's trying to set up correlations to 87 and to 29 and show how we're going to crash and it's coming, and he's wringing his hands because if it happens, he's going to be the guru going forward because he warned everybody 57 weeks in a row. Eventually the guy might be right, but right now he's so far from being right it's not even funny. I actually saw him delete his tweets the other day. I think he needs to go back to his chalkboard because he's not reading the tea leaves correctly. 3 out of 4 major indices are in all-time blue sky territory here.
That's the same as holding a short stock that keeps ripping up on you and just, it's going to pull back soon. It's going to pull back soon. Well, You'll get a margin call
I know
before
somebody that works there. They told me something bad's going to happen. I'm just waiting for it to happen. All right, let me send it back to you, James. Jamie, there you go.
All right. So taking a peek at the itinerary today. Before we get into the Holly recap, just want to give everybody a peek at the performance chart. Still widening the gap between us and the SPY. So, you know, things are working as we had hoped with Holly. They continue to work.
Casino odds.
Today, interesting observations because a lot of these things coalesce and it makes a lot of sense, you know, from the viewpoint that Steve just showed us because Holly showed up with 10 strategies today, and we can see here it was an even split between longs and shorts. We had 5 longs and we had 5 shorts. So when I saw this, you know, as of probably Saturday is when I started looking to see what Holly had drummed up the night of Friday, I was like, well, you know, at least we'll have the bases covered. 5 longs, 5 shorts. Should be an interesting day. And of course, you know, just taking a peek one more time at this candle that was turned in today on the SPY, you know, the market is definitely having its fun day. Volume levels across the indices, if we take a look at my little index box here, SPY, diamonds, and Qs, you know, all hovering right around in relative volume of 1. So normal volume in a day like today, and of course there was probably on the SPY today, we had a downside of, what was it here, a little over a point. A little over a point in that down move that happened on SPY today, you know, from the top here down to here, and then a nice little bounce off the bottom. Now, of course, as the market was unfolding during this down move here, and Holly was doing her thing, you know, predominantly all of the trades were pretty much short today. Well, I say predominantly, we had 15 trades total, as we can see by adding this column up here. 15 trades total, and 10 of those were short trades, and only 5 were longs, as we can see here. So Holly definitely established her bias on the short side, which was right. Bottom line, the market just wasn't giving a whole lot today, and that's not to say that some stocks didn't go down more than others.
The market was pulling back, kicking and screaming like it didn't want to.
Yeah, you know, like there were a lot of stocks, and what I noticed today is there were a lot of very similar patterns regardless of what the stock was. Here we can see Dix, right? Nice little downward move all day. If you start scrolling through charts on a 5-minute level, you're going to notice there were a lot of other patterns that looked maybe, you know, from just a quick glance looked identical. Maybe a few bars might be out of line, but there were a lot of stocks going down today, but the ones doing it on high volume were few and far between. And so Holly's results more or less reflect that sentiment. So we can come over here to risk on and we can see, hey, if we were just blindly taking everything that Holly threw at us today and is holding it to the close, 60 cents. If we were going risk off, meaning getting out when Holly gets out, whether it's at timed hold or stop loss or profit save or reduce risk, 65 cents. So especially when we see a day where risk on and risk off are pretty much equal, you know, it tells you that there was a, you know, when they passed the tray around, there were some cookies, but if you didn't take them, next time it came back around, all you had were some crumbs. So, nice little performance from these guys today. On the long side, float on kicked out 1, this guy kicked out 2. Of course, you know, the more trades there are, the better 100% looks. And of course, we see downward momentum today. Had 4 trades, and every one of them was profitable. But when we look at the risk of profits here, there just wasn't a whole lot on the table today from a statistical probability standpoint. Now, having said that, there's always ways we can interact with Holly to try to get a little bit more than what she's showing here with risk off or risk on. So let's just take a look at the trades today. Now, interestingly enough, Steve, I have not seen, when we're talking about longs here, Power Hour long hasn't been showing up for quite a long time now.
Oh, wow.
Now, when we go back and we're talking about what the market might do, well, if we do stay above this line and get a little sideways consolidation on the price, I would dare venture to say that we would see power hour long showing up a little more frequently. Of course, it showed up today. Is that a leading indicator or a harbinger of what's to come? Maybe, maybe not, but it is an interesting observation. And of course, that one didn't really, it's nothing to write home about today, but when we did recuperate here, bounced off the bottom, didn't come anywhere close back to the high, of course, but it was interesting to see power hour long knock out BCO and LOCO. BCO right here, entry of 41.25. We had a stop loss down here of 40.80, and a nice little upturn at the close. Let's see the other one that came through there today. Not a whole lot of stuff going on in this one.
Can you go back to that last one, because again, I love those types of entries. Entering on support. All right. This was a long trade, right? This is not a short trade. Okay, so entering on support. That's the kind of stuff that keeps people in the game in this noisy market. Reading books from 2001, 2002 on buying explosive breakouts. Yeah, those can still work, but it's not the bread and butter trade that it used to be. There's a lot more noise and nuance in the market now. So anytime I see a nice entry at a contrarian level that just doesn't seem to make sense to your brain, but it's making all the sense in the world to the statistical plot dots of the AI, I like those. So I just wanted to imprint, again, as I say, sometimes visually, on the support, buying on support. I like that.
Right, and we can see the support right here, and then we go back to the daily here, and as that candle was completing this little wick, butting up nicely to the prior day. So yeah, a nice simple little long trade at the end of the day, which probably, if I had to guess, a lot of people were like, I've tried a few longs today, they didn't do so well. Maybe they took that trade, maybe they didn't, but the big difference between a lot of the long trades that were going off today weren't so statistically sound. So,
Yeah, when the bigger indexes, like we showed you 10 minutes ago, take a break and take a breather, risk off starts to become a bit more likely as things don't follow through and there's noise and there's individual games going on in certain areas. But when we have those broad-based rallies where everything's moving from the bottom left to the upper right throughout the day, those are likely going to be more risk-on type days. But I'm not surprised to see the market, as we think, again, as we're speculating here, that we're kind of day one here, maybe even day two, looking at some of those dojis on Friday, but we're in the throngs of a bit of a pause and a bit of a pullback. And when you don't have that backdrop, turboing higher or lower for these directional trades, it can show up a lot where a lot more trades are a little bit more messy and a little bit more noisy.
And so, interestingly enough, let's see here. BCO, entry price of 41.25, which is marked up right here. And on the power hour long, of course, we have a hold time that is designed around of 30 minutes here. Okay? So, interestingly enough, and of course we see this a lot of the time, but usually it's Holly taking the option to use her profit save or reduce risk functionality. Now, since this one has a 30-minute hold time, she held the whole thing, or excuse me, she held the position for the whole hold time, 30 minutes. And of course, we can see Holly makes 5 cents on it. And I just want to confirm, 12 to 12:31, of course, at that point in time, the market still has 29 minutes left. So just like with many of the other positions that Holly initiates, typically earlier in the day, when we see Holly exiting here after 30 minutes, do we have to exit with her? We can. That's an option. But a lot of the times when we're in a position like this and we can tell, hey, butting up nicely against this area on the daily, got a nice little wicking candle is the entry, butting up with these guys over here, well then a lot of the times it might be in our best interest, okay, this thing's going our way, we're up a nickel, Holly's getting out because she has to, never even came anywhere close to stopping us out here, so that's when it might be in your best interest to hold on a little bit, because had you done that today on this one, instead of making 5 cents, you make 6 times as much. You make 30 cents with a pretty stress-free hold in this case. So once again, just a simple example of going risk on when you see Holly getting out of a trade, regardless of the reason. All right, so that was a long from BCO.
Let me qualify that. If Holly's getting out of a trade because of stop hit, there's a good reason to get out with Holly. Just wanted to qualify that.
Right. And that's a trade around.
Then it becomes a secondary entry, possibly.
This is a good example of risk on.
Staying in the trade, yes.
Correct. Mm-hmm. So just to kind of rehash what Steve and I just went back and forth about there is the ways we interact with Holly. We can decide to go risk on when she's getting out of a profitable trade. But if one goes against her, and here's a good example right here. You see how on this trade right here, AEM, Holly reduces the risk. Here's her entry, comes down, she gets out. All right? So she takes a 6-cent loser. Let's see, let's look at the times here. 10:27, 11:13. So round about a 45-minute hold time here. So she gets short right here, starts to come down, and she doesn't get out down here, right? Pops back up, and she gets a little fidgety because of these wicks here, and she takes a 6-cent loser. But a lot of the times what we can do is we can draw a line like I did here at the entry point, so we can see we had an excursion or a pullback here, and Holly would have been unprofitable. Come down again, a little dip below, but the bottom line is they'll either hover around these entry points and make second, sometimes even third, or 3 or more excursions through that entry price, because the statistical probability is good for the day. Sometimes they go after the first excursion, sometimes they take 2 or 3. In this case, the way I would look at it, of course, during the market hour, and we can feel there's not a lot of follow-through one way or the other, theoretically you could have traded this thing another time as it came back down through here. And then there was a little bit more cookies to be had, while the trade was being passed around. Now, what about an example of one that didn't work? Because you can only get alerted if you draw the line. And if it never comes back there, so be it. A good example would be Lulu today. Let's see here. So Lulu was a long from vintage, right? At this price right here. Draw a line straight across. Now, obviously, this trade did not work. Holly got out. Her stop was hit. 53 cents. So if we went and we drew that line up here, look, it never even comes close. So it's simply a non-event. But if the stock, whether it's a short or a long play, does give us red or stops out Holly, it's still worth paying attention to, because if it encroaches on that line again, we'll be told about it. If it doesn't ever do it, like this case, it's a non-event. It just never gets triggered for us. But a lot of the times, there's room for second and third dips around those entry prices. All right, so sour gums, SGMS here. Another good example of a short where Holly makes 7 cents. The time stop hits, but look here, risk on profit 28 cents. So we had the potential to make 4 times more than Holly did in this one. Of course, when it never comes close to our stop, and of course I have to compress this chart a little bit to get the stop to show up, which is right here. So, once again, stop losses are there for a reason. So we see, the entry price here, and Holly takes her 7 cents, but then, it's never getting close to our stop, getting a little sideways action, nothing to get too nervous about, and there was a lot more meat on that bone just by using some very basic risk parameters if you do decide to stay in that trade longer than Holly. And usually there are more of these. We did have this one as well, but difference between 17 cents, 25 cents, another 8 cents. This one is a little bit more attractive. And this one was kind of interesting as well because initial entry here on the short corresponds with the blue box here. So we get nice follow through, and let me make this not so scrunched up here. There we go.
Yeah, first 10 minutes were great.
So look, it's just boom, right in the money. And if we take a look here, Holly, profit save. All right, that's her getting nervous. Stayed in the trade not quite a minute and 30 seconds, if I'm seeing that right, Steve. So real nervous on that gig right there. Takes her 8 cents. Of course, we could have made not quite 3 times that amount, but at least scored about 20 cents off that. Interestingly enough, if we are still in it or took our profits, either way it's fine. But then guess what? We have a second occurrence. Pops back above that entry price, set our price alert to go short, and then look what happens on the second occurrence here. Basically the same move, but a little bit tamer. And a lot of the times these on the way down or the way up, they can be harbingers, of what's to come because, hey, the sellers took control, they couldn't keep it down there, snaps back up. But eventually, if there really is a seller in it, he's got to get his business done. So, while the shorts did work today, as Steve and I were illustrating by looking at, the S&P and how small the range was today compared to the other days, there just wasn't a whole lot of follow-through, which we can glean information from that. Yeah, it was obviously a selling day. A nice little down move on the SPY to the tune of a little over a point, but it was over once that bounce off the bottom was put in today off the SPY. Then it's pretty much all she wrote for the shorts on a large basis, and keeping in mind that we're not talking about all of them, but only the ones that make good sense in the statistical probability world. All right, that's pretty much it for Holly. Her performance, pretty good reflection of overall market activity and sentiment. She was right with the shorts. Just there wasn't a whole lot to be given today, so we couldn't take what is not given. Now, we're going to get into a little back test and optimization today, specifically because the response from the SPY 50 that was, man, I can't remember now, was it 3 weeks ago? Somewhere in that neighborhood is when I first produced that first version of the optimized SPY 50. Got such good feedback from it that it was pretty much time to redo that one, because when we're optimizing via a custom list, you don't want to let those lists get stale. So what I did today is I redid the SPY 50 list. This was going to be called SPY 50 version 2. The list has been optimized. So at the end of the webinar, don't worry, I'll make sure everybody has the cloud link for the configuration along with the custom list as well that you can point to. And just keep that one up. Because even on days where the market is down, a lot of the times it's kicking out things that still continue to go up. But even better, when we do have a decent up day, it can be very enlightening as well. So let's talk a little bit about how I arrived at this set here. And so I'll just go ahead and run the back test on it. And we're going to be using a generic hold time of about 45 minutes here. We're not going to, we're not even going to bother with stop losses or profit targets here because, a lot of people kind of get it in their heads that just because you use the back tester to do some data mining, that you have to, it's basically a way to get realistic expectations. Sometimes we're going to want to use it verbatim, as in the case with what Holly does with it, but a lot of the times it's just a tool for us to go and dig a little bit deeper than most people can in order to generate a good universe of things coming through, or what we could call a high-quality information stream. Meaning, it's a pretty busy window. Are you trying to just blindly take everything that's coming through it? No, you're not. But these stocks are going to be liquid and doing exceptionally high volume, so regardless of the pattern that you're trying to play, if the pattern's there and the risk is in place, then it's a go. If it's not, then it's not. But by watching this window, you are going to have some nice opportunity placed before you. So I'll just give it a quick back test here. This is where we cue the elevator music that we do not have. But hopefully she won't take too long here.
It's like Buddy the Elf hitting all the floors on the button, the elevator button. We have to wait. That wasn't that bad.
No, and keeping in mind the amount of computational work that's going on here.
And other people trying to plug in at the same time and do their work as well.
Exactly, and the database being updated after the market's closed. And we're almost done. Steve, are you making it slow down on purpose over there?
No, I'm not doing anything.
What did you do? Okay, so here's the optimized new list. Now, if you take a look at the daily here, it's a 40-day back test. So it's definitely kicking out many more winning days than losing days. And, without going back and looking in too much detail, it would be interesting to go back and see, hey, what did the SPY do on these days? Was it going down or was it going up? So just by using some common sense methodology, today, when we saw the market coming down, you might not just want to be focusing on the SPY 50 if the market is coming down like it did today, but on a down day where we quickly bounce and we're green, then definitely you're going to be wanting to pay attention to this. You'll want to look at it every day, but just keep that in mind. It is based on...
days last week looked pretty green to me.
Yes, yes. Okay. So this is what your pool is going to look like. So anything coming out of this ticker has got some pretty good odds behind it on a 45-minute hold time. Now, of course, going back to the question that we always get, Steve, well, that's a day trade. Can I use these things for swing trading? Of course. Of course.
Every trade starts off as a day trade.
Yeah, we want the good entry. We want to be in the money, and then by the time the close is rolling around and we're like, hey, we're up $1.50 on this thing, I'd hate to sell it now and it goes up 2 points tomorrow, so all we do is we're going to look to the left on our daily, like we always do with everything else, to try to ascertain the realistic expectations, and that's going to help us figure out if we want to make a swing or an intraday or a hybrid of the two. Peel out a half, hold the other half overnight, depending on what you're comfortable with. So extremely liquid stocks coming out of this, the top 50 stocks that showed up in the initial scan, and I'm going to show everybody how I arrived at that list. Now, interestingly enough, most winning days in a row, 12. Most losing days in a row, 4. Now, how did I arrive at the list? And I seem to have closed the wrong window here, so bear with me and I'll retrieve it. Okay, so we need this one back for sure, but we need the basic one as well. Make sure I grab the right version here. Okay, so this window might look familiar to some people out there. This is the basic turbo brakes up configuration that is looking at the entire market, right? So symbol list here, we're looking at all symbols. Now, since we're looking at a custom list, my initial scan was this. Of course, this is a modified one as well, but I've got so many of them in my cloud, sometimes they're different, but these are the standard settings. Stocks between 20 and 150, hitting a new high as the alert, but only the stocks that in the last 1 minute period traded a bare minimum of 3 times the amount of shares that they normally trade in a 1 minute candle for that specific stock. Now, we don't really need these guys in here, because if we're looking at the SPY stocks, then we know that they're going to do some significant volume. So we don't even have to have that in there really. So then I would come over here and I I would say only the following list, and find my initial S&P 500 list. Make sure everything looks good again. Okay, so now we're pointed to that list. So what I did initially here is I just came in here and I said, let's backtest this. Of course, everybody's a little bit different here. Some people wait 15 minutes, some people wait 30 minutes. On this one, I'm just saying, let's sit out the first 30, give everything time to kind of snap around, come up with some legible-looking type of range. And we'll just run this for something generic, like a 45, 60-minute hold time. No profit target, no stop loss initially, and for a period of 40 trading days. So we'll let the backtester get through its calculations here. And then I'll show everybody how I went about curating that list, which it's one of the more basic forms of optimization, as opposed to going through each and every filter. But depending on the universe of stocks that you're looking at, like the S&P 500, it can yield some pretty interesting stuff here. More or less kind of a harbinger of the things that are leading the pack, or, you know, if the S&P is a snake, these are the stocks that are going to compose more or less the head. And once again, we're in the final stretches here. Results are imminent. Okay, so you can see here, 4,246 trades were just back tested. You know, that's a little bit too active for most people to keep up with, including myself. Unless you're a machine, that's almost impossible. Now, when we look at the daily, nothing special, just kind of the, you know, little seesaw there, up and down. So, to go through this list of stocks that was just reported to us and find the ones that have been performing the best for this configuration here, we go to the optimization tab. And of course, we can optimize by all of these categories: price, time of day. Interestingly enough, look what would happen if we sat out for an hour instead of 30 minutes. Okay, so that's one of the changes that we're going to make right now.
That's an obvious one. That's like cutting fat off a steak.
Right, and then even so, you can see down here we're getting a little lackluster in the latter part of the day. So it might even be the best to not start it till 7:30 and end it at 10:29. So,
yep, that's one of my favorite optimizations. It's very simple. The markets have dynamics throughout the day. They have to open, there's a middle, and there's a close, and there's certain things that are just too noisy in the first 30 minutes, and so certain setups, certain strategies and methodologies are going to kind of have a sweet spot throughout the day, and using this tool is kind of fun to try and find that sweet spot.
Okay, so, you know, now when we go back, then we might see some other additional areas that we can pair out. And a lot of times what I've found is useful is making two different versions of something, okay? So for some reason during this time period, we lose, and we lose in this period. So whether it's as simple as writing these times down, hey, between this time frame and this time frame, I don't have to not watch it, but I'm going to be a lot more selective during these time frames. Now, why is it like this? I don't know, but this is what we found in our data mining expedition here. All right, so that's really the first thing that I always look to. Are there any times of the day that I can eliminate right off of the bat? Now, when we want to curate our symbol list, we come over here and we can see, okay, interesting. I've got the top 10 performers coming through here today, and I can see they're not just one-off guys showing up at random. These guys are not only coming through, but they're coming through 8 times in a 40-day period, or 6 or 9. So we might want to expand this to the top 20 or the top 50. And then all we do, once we have these candidates queued up in here, we have the 50 top performers. You know, obviously some do better than others, according to the rank here and the amount of profits generated during the time period. But to easily grab these symbols, what we do is we just highlight everybody like so. We come in here and hit Control-C on the keyboard. At this point in time, you're just going to pull up your favorite spreadsheet program and, Control-V it in there or right-click paste so that you have all of this data in your spreadsheet. And, of course, the easy thing to do, we click on the header for the spreadsheet just to highlight the symbols only. And then once we do that, we've made it real simple within Trade Ideas to just come up here and go Symbol List. Once we create the new list, as you can see here, we just simply paste them right in. So this is the refreshed list that I did earlier in the day. So I will make sure that I pop the configuration into the chat window and drop the list in there right after it. So all you guys have to do, take that cloud link, do your thing with it, and then simply highlight the whole row of symbols that I put in there and copy them, throw them into your custom list functionality, and just whatever you do, once you do that, don't forget to point the window to that list, all right? Because otherwise, and I'm going to go ahead and remove, these will be removed because we don't really care about maximum minimum price if we're just looking at those 50 SPY stocks. Volume on the daily average isn't even important. This guy is really all that matters, along with this guy and the proper alert.
Simple.
All right, so I'm going to go ahead and do that. Make sure that everything looks proper in here before I send it on out. We just got these two guys. Symbol list. And just double check. Make sure you say only the following list and SPY 50. All right, so here comes the config. All right, there we go with Cloud Link, and now for the list.
Eddie is asking about if there's a video on how to use the software. I'm going to drop in just a real simple 30-minute video. It's called Getting Started. I'll drop it in the public chat, in the public question box there so you can see it. Anybody who wants to copy that YouTube link or the short link to it can. But there you go.
Right, and it looks like the list showed up nice and easy there, so everybody can just highlight and copy. All right, Steve, well, taking a look at the time here, we got about 8 minutes left, and I think we're pretty
Small
much
business and a little bit of new business, maybe. Yeah.
Yeah, we got a little bit of price alerts to talk about real quick here before we let everybody get back to their day. Because
now again, when the market's moving straight up, everybody feels pretty smart, and we're going to include ourselves in this because last week was a great week in the market as it broke out, but we had some really nice alpha generated on some of these triggers that we set up for you guys last week. I'll let Jamie highlight any specifically if he's curious.
right, well, these are all the alerts. Of course, we can see we got triggers on 4 of the 5.
CVI was look at that CVI. You got to go back to that one.
Oh,
I mean,
yeah,
I think that one. I mean, there's 2 days of just absolute 4 days of the 2 days prior to the trigger, but 2 days of absolute bliss. That was a huge move, a 30% something move, and again, nothing more than looking for trend changes that have the secret sauce. That's CVI. Let me go over my screen so I can just grab it quicker. But that's CVI, the metrics, and on how many shares?
Oh, what was the float?
15.
Yes, 36 and 15.6 million on the float.
Yeah, that's catalyst type stuff there. That's possible rocket fuel. And so when you see a stock like CVI, and we know from doing our homework and having our trade ideas metrics tools here, we know that the short sellers, yeah, there may be a few stoic ones in there, but chances are there's going to be a few that are just going to absolutely panic once they get above these levels that we're identifying as pivot levels. And then, of course, using our green line to trigger, which is, of course, the price alert premium feature of trade ideas, make sure that we never miss it. And so that's what we're focusing on here. A couple of price alerts from last week. So I saw some people in Barry's room that were happy that they caught that. That always makes me feel great. You know, I do like to hear about the good ones. I don't always like to hear about the ones that don't work. So I know it cuts both ways, but it was nice to see that one working pretty well. So a little dovetail into this week. Yeah, we had some great ones last week. But coming off the heels of our intro, we feel like we're slowing down a little bit, like we might be ready for a breath. Not ready to put our short hat on and start trying to make money short. We saw that that was, kind of, spitting into the wind today for the most part. So what we want to do is just pull back a little bit and be a little bit more cautious. And I'm going to dovetail it into an actual trader's axiom. This happens to every single trader I know. I've had discussed it with every single one of them. Matter of fact, it was happening with Airplane Jane about 2 months ago. I almost sent her a private message, but I didn't feel it was my place to. But it happened on her own, and it's this. You start to get in good markets, like the dry ships things and things that were happening last week where it just seems like you can't do any wrong. You've got to be aware of overconfidence in this game. It will eat you up so quickly. You have a couple of really good days, and you're like, boom, 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 that looks good. Yeah, I'll buy that. I'll buy some more of this. And before you know it, you're buying too much, and you're not thinking about your risk. And it doesn't take long before what was working stops working. And if you're not adjusting your overconfidence and your aggressiveness, you're going to get smacked pretty good. And, to Jane's testament, she blogged about it. She said, yeah, I took my worst loss. I got overconfident. I stopped following my rules. I just fell into this mentality that no matter what I did, everything was going to work. So be careful of that, and that's kind of where I think we are this week. So we don't have a whole lot of really good confident picks for you. We got a couple to watch, but we're trying to at least make you guys mindful of not getting overconfident in your trading, and we don't want to get overconfident in our stock selection picking either. So just a quick little sermon on that.
Right, because we could load up on some things that look okay, but as Steve and I were discussing earlier, that's not really what we want to do. We want to keep these plays as quality-oriented as we can, and it's not just determined on the chart pattern itself. The short float and how many shares are in the float of the company all play major factors in stocks that run huge amounts, like our friend CVI did. And not to be forgotten about, little TCS with a short float of 22.8%. Didn't do too shabby either from its break.
Oh, yes, look at that. Yeah, I remember that. That really nice wedge that it broke out of. And then again, knowing what we know, and I'll take this time to answer the question. I know, Jamie, you typed it in, but it's probably worth a second explanation to David. Not understanding the short float and the difference. Well, the amount of shares in the circulation for Intel and IBM, those hundreds of millions, billions, but you'll have other smaller issues that don't have as many shares. Maybe you've got 80 million shares that was created in the document, but 40 of them are held by insiders, and maybe another 25 are held by institutions. So that really only leaves you with a tradable float of 15 million, and that's not very many shares. And so when you take the beginning size of the sample, a small sample data size, we'll call it, and then you sprinkle on top the fact that a good chunk of those shares being traded are being held by short sellers who want the price to go down. And we know this number to be quantified because the brokers have to supply that number twice a month to the SEC. So those short float numbers, they don't update every day, but they'll update twice during the month. And if you can find something above 20% or 25 or 30%, with a super small float like we have there, that's just a recipe for an explosion. So that's about the best way we can explain the trend change setup I distributed. What do you mean a trend change setup? Well, you've got to start learning how to look at charts and identifying levels that used to be resistance and could become current levels of breakouts. Not all stocks go down forever. Some do, some don't. they have cycles. They're in favor for 52 weeks, then they might be out of favor for 52 weeks. So we'll take a look at these ones that are shown up on this trend change lubricant top list, which are basically stocks that are beat up on the year, but the short sellers might be waiting for too long, overstaying their welcome. Let me just put it that way, because I don't care what CEOs say, I don't care what CTOs say, I don't care what any of them say, they all lie. The only thing that doesn't lie are the footprints in the sand, which is where people are putting their money. The only thing that pays is price. And so if you can identify levels of interest that could very much spook a short seller if it got above XYZ price on these particular setups, that's how we're finding a lot of these trades. And so that's the significance of using a trend change setup. All right.
Well explained, Steve, well explained. And of course, there was a question, what does the trend change signify? And of course, what we're talking about is, TCS is a great example. It was up in the trees back at 22 bucks. The stock gets hammered down to below 5 bucks. Then it stabilizes, and when it pops out of these channels, we could call that a trend change. The
Back
trend
into accumulation mode.
Instead of tubing down, well, they're buying it up again.
It was in distribution mode. It was out of favor mode, but now it's early accumulation again, coming back. All right, so which ones do we want to set this week?
Yeah, so let me get rid of these guys. This won't take too long because there's not very many. But first and foremost, Steve, I believe Little Noodles warrants a price alert because also it's the trade of the week as well.
It's the trade of the week, and it just kind of got caught up, I think, in the flavor of the day. But still, it's exactly what I was just explaining to you guys. Here's a stock that has a tremendous short float. Percentage are short on a low float, relatively low circulation of shares. That orange line is a very significant line. If you're a short seller, you probably don't want to be much above that line. And if we do get above that line, the short sellers are going to have to buy to cover. You have to buy to close a short position. And when you're buying, you're competing against other buyers who want to go long, and it just becomes a big buy party and a perfect storm of buying. So that's what we're trying to early identify here. And this is the actual trade of the week. I'll talk about it more tomorrow. Hopefully it'll do something for us tomorrow, but if it doesn't, again, patience is the name of this game. Bigger picture is what we keep our eye on the prize, not what happened today in the smaller picture to change our mind on a whim.
And Steve, so I don't have to, close this and reopen it. What is the short float again?
On
Noodles?
Let me pull it up on mine. It's 23.7.
There we go.
On 26 million, which really isn't that big.
No. Okay, so that's the first one, is Noodles. Then we have two more. We have Gulfmark, GLF.
Mm-hmm.
And I believe we're
pull back on that one, aren't we?
156 on that one.
This one's going to be a different alert. It's going to be a pullback. It's not trying to buy the new high. Now, what you got to do is you got to code it as a long because, look, it wants to go short. You got to code it as a long. Remind yourself it's a pullback. Watch the price action. See if a bidder comes in. But it's a completely different animal than chasing a breakout. You can see that that was the level it broke out from. That orange line goes right across the top of that hitch from 3 weeks ago. That little hitch could become future support, but it might only do it for 5 minutes. Might not give you much time, so the price alerts will make sure you don't miss it.
All right, I did it again, Steve. I keep covering my single stock window up. What's the short float on that one?
25% on Gulf with a 19 million float. So that's starting to get into the, the catalyst rocket fuel stop levels. Anything above 30, 25 or 30% is huge. Anything under 20 on the float size is a great short data sample to really make things move, or as Dan Merkin calls it, the price moves very efficiently, very slippery, very quickly.
Yes, okay. So the last one is this MDCA, and it's just going to be a push through the high.
Yeah, through today's rejected high.
Foundation there. And, of course, since we have kind of a lazy market, maybe the market peps up tomorrow, maybe it's lazy again, but definitely keep an eye on these things. We got a short float on this one of 13.5%.
A rather larger float at 50 million, but nothing huge. Anything over 100 starts to get a bit big.
All right, so
it can happen quickly in stocks that have 20, 30 million floats.
as we say, there's only 3 today, but we'd rather keep with the quality-oriented plays and just, you know,
Not get overconfident. Yep.
and yeah, exactly. Do not get overconfident. All right, so let's get this one in there as well, and you guys will be all set. And I think we're over the hour now. So Scott, if you're ready to come in and tell everybody about the nice discount programs that you have set up for them, we're ready for you.
Yeah, thank you. So something we like to do to thank everyone for attending the webinar is offer a discount code. And the office hours code that works this December is capture. Oh, you're on the right page. I'm not. I was looking at the slide from last week's session. So it's Trade Smart, all caps, at tradeideas.com/price, and that'll get you to the page that you can use it on checkout. So that gives 2 different percentage discounts. It gives more of a percentage discount on premium, which starts at $188 a month. So it has 15% off of that, or 15% off the $1888 per year. And that is a great way to get going with Trade Ideas Premium. Full access to Holly, the AI, full access to the odds maker backtesting tool, shareable price alerts, and other advanced features. Standard's only $99 a month, and then you can also apply that code to take 10% off either the first year or off of the first month or the first year of standard. So $99 a month is where it starts, or $888 per year. A great way to get started. Something that both standard and premium include is a full hour of one-on-one training, the Hour of Power. So whenever you sign up for Trade Ideas, go directly to the support section, click on training, and that'll let you choose the best available time and date for you to get a head start on using Trade Ideas. And it's a great way to find out how to set up the system that best suits your trading style and get any of your questions answered. Perfect head start. So Trade Smart, all caps like that. It's a great way to save. Thanks everyone for joining us. We're going to have a recording of this up later tonight or by tomorrow morning, and you get an email tomorrow about this time with a reminder of where the playlist is and how to find it. If you have any questions, just email us at info@trade-ideas.com, or you can shoot Jamie Hodge or Steve Gomez an email with the emails you see on the screen there. If you follow us on Facebook, Trade Ideas Pro on facebook.com, great way to see some additional content. And so is following our Twitter accounts. Steve Gomez is Today Trader on Twitter. Jamie Hodge is QuantBot. Dan Merkins, Trade Ideas 1. Again, thanks everyone for joining us. And that phone number is a great way to get in touch with support for billing or subscription issues. However, email, the info at is the best support mechanism to use to get routed to the correct team member to answer your questions. So thanks, Steve. Thanks, Jamie. Thanks, Andy.
See you tomorrow.
Yeah.
Thanks, everybody. Have a great week.
Yeah. Later, guys. Bye.